Hi, everyone. So far, the stock market appears to be going through a series of churning. The NASDAQ on Friday was down 0.50%. And I know that even though we broke above that downtrend red line, you're not supposed to come back into the downtrend line area. And if we extrapolate it out a little bit further here, we can see that we've traded back into it. So overall, this index still has the look of something that's churning around. We'll see how it goes, but I want to reiterate it's never good when we rally on low volume, then get heavy volume and have more higher opens and lower closes. That doesn't turn out well. We had that back in February. We have it back here again in May into June. And here, once again, up here, we have all of our high open, low closes, and we have the heavier volume. So I swear, I still think that this market wants to turn lower. It's too mixed in stock picking. I've made it clear over and over and over again to trade small or trade not at all. Cash is king for new investors. Small kings perfect for people that need to trade and keep in the flow. I'm one of the kind of guys that need to keep in the flow, so I need to take everything because when I don't, it costs me. Like the WBAI long, I passed on 12% later. The CAF ETF long, I passed on, and now it's up 5% a couple days later. So it's things like that. You need to always take your signals, even though it appears over trading to some investors. It isn't whenever you are operating as a hedge fund with a large account, because this isn't the kind of market where you focus 10-20% on any one position. You do that, you get screwed, because seriously, how do you know that Facebook with this chart pattern is going to gap up? How do you know that Trip with this chart pattern is going to gap down? You don't. You don't. It's a crapshoot. And that's just it. Either you love Trip or you love Facebook, or you go long both of them and you cut your loss on the one that's wrong and you stay long the one that works. And that's normally the way to do. You're either going to miss big or hit big. And I don't like trading like that. Way too risky. It's way too much of a crapshoot here. So you got to trade small or not at all. We continue to have just too many failures. And on that end, let's go ahead and look at some shorts. We have some not short sells. So RHP, everything still looks good on here, but the close below the 10-day moving average yesterday on such a bad session where it gaps higher and then closes lower, engulfing the previous day's range, is a red flag, but on low volume, not a big deal. But now that we have a close below 20-day moving average, I have to look at it and see if I want to take some profits or not following the long signal back here with us up only 5%. Well, the fact that we followed through with it the day before selling and did it on higher volume is a negative. The fact that BOP went more negative is a negative, or went lower is a negative. Not pictured here, TSV and MACD is rolling over. And then one of the main things is, see as it tried to break out here, the intraday reversal, boom, gets to this old high here, has a down day, tries to start to move up from there, and look at the intraday reversals. We got a lot of big wicks here. It just can't seem to hold the high of the day. The few sessions that it does close the high of the day, the next day we don't see much happening, so there's no follow through. So because of that, I'm going to go ahead and take off some of it. RHP is going to be a 25% sell. UDOW, this is the first close clearly below the 20-day moving average on heavy volume. So UDOW is a 25% sell, especially since on a relative strength basis on the very short term, it's starting to show some relative weakness to the overall market. So I want to keep up on that. But the heavier volume and strong close below the 20-day moving average is a definite 25% sell for me. Also, CL, another lower volume sell below the 50-day moving average. But like I said, we have very small gains. We've been in long this stock for a while, so I don't have much more patience. So that first close below the 50, that was a 25% signal for me, lower volume, and another lower volume close below 50. If this was a heavier volume close today, I would go ahead and exit the entire position with a small 1% gain. However, since it's lower volume, we'll go ahead and only take off half. We'll see what it does here at the 50-day moving average. We have another down day. We come back into this intraday price range. You can see the high is 66.92. 66.92. We enter 66.92 level. This trade will be completely off. To watch a small gain go into a small loss is a final sell signal, with the market looking like it wants to have a trend change here. Remember, we're under neutral signals or buy signals and everything. The Russell 2000 is once again on the cusp of switching back to a sell signal. If it closes below the 200-day moving average, it will be a stronger switch than on this one where we were extended. We've relieved the oversold conditions, and it sets up for a higher odds that we're going to have a lower leg down. So with that, CL is going to be a 50% sell. And then ACT, we went long this position. Remember, since earnings are coming up, I wanted to move higher immediately or go nowhere on lower volume. On day one, it did that, went nowhere, closing basically where it opened on lower volume, below average volume. That's what I like to see. And even though on Friday it had an even lower volume pullback, it's now not going nowhere, moving higher. And since it's closing at 217.45 and 217.45 is below the low day at 217.65, this makes this a 75% sell. I'll go ahead and let the 50-day moving average be where I sell the rest of it, unless it gaps up and then sells off all day long and it's still above the 50-day moving average, but volume's huge and now bops red. Then it's going to be a full sell. So those are our sells. New longs, these were the best candidates I could find. CAAS, if you can't tell, that's too volatile short term. Yikes, because it is. Oh, I'm going to go here, function 4. You can see that that's a daily chart on an arithmetic. It's going to probably, before it's safe to go long, you're going to want to see it get above that 985 level on a closing basis at least. In this market, I would be careful with that. And then also intraday, it didn't have a strong close. KRC looked to me to be a good possible long signal. You can see, though, it closed a little bit off its highs. So I went more in depth and looked at the intraday price action. I could see that there was a constant seller of size throughout the final hour leading into the close. So KRC did not look good at all coming off its intraday highs of 63. And once again, you know, we don't have too many high day closes here. A lot of tails off the highs, so not a very strong signal. And then MGM, it has earnings coming up, and you can see it still has that overhead July resistance. Volume isn't huge on the pocket pivot point signal, so it's just not interesting. And those were actually the best one of the day, though, was YY. Clear pocket pivot point signal, but if my memory serves me correct, it has earnings on Monday. So if you want to buy a breakout ahead of earnings, go for it. Some people did that with DHI. That turned out real well. Some people did it with Facebook, and it did work. So there's the one where it works. People did that with Trip, and it failed. And people did that with Amazon, and it failed too. So buying breakouts ahead of earnings, not my MO. So YY, you're beautiful, but if you go higher, you're going without me. I do have one new long position, though. URA, uranium, is giving me another pocket pivot point buy signal. You can see here, if we look up close, from the lows, excellent price action. Let's actually get really close. See all the bullish intraday tails, the positive price action, the strong closes whenever we do have up days where we close higher than where we open. And now with the pocket pivot point signal here, another strong day there. We're going along. We hold those June lows. We rally, get back above the 50-day moving average now. We're looking stronger and stronger. Now we go down, and now we make lower highs, and now we make higher highs, and we do it with a pocket pivot point signal breakout. We take out the 200-day moving average, pull back on lighter volume, and now we have a very large volume pocket pivot point signal off the 10-day moving average, with it still below the 200-day moving average, which actually gives us a higher reward, lower risk setup. So with URA, you can use the 1511. I mean, there's so much accumulation here that this move should start the uptrend immediately. If it doesn't, we have the 1511 level to cut your final loss. And if you're really brave and if you really believe in the uranium's going to make a move, you can use either the 10-day moving average, which why would you do that? You already have the low day 1511. Or then you can use the other cut loss, which I might use if URA goes sideways and sells off on no volume, below average volume, but BOP keeps on increasing and price action's tight. I'm going to go ahead and use the 20-day moving average, instead of the 1511 low day. 1511, we'll get rid of 75% again, and then we'll let the 20-day moving average tell me when to get out of the rest of the position if it doesn't move higher. Remember, if you're a new investor, it's definitely a time to consider just sitting on your hands and letting the market first resolve itself higher before you go all out and want to get invested in this market. Like I said, once again, the NASDAQ looks a little churny up here. A lot of heavy volume with very little price action, and we've had some ugly sell-offs, 2 clear ones without any really big update. We had the nice reversal of the sell-off, but now it appears like we've tried to want to roll back over, and the Russell 2000 continues to look weak. So you need to be careful out there, everyone. Thank you. Have a great rest of your weekend. I'll see you on Monday.